are you? It's me again, Virginia Cassano. With new information as usual. This time I brought a special guest, again another loan officer, again another Oscar, and again another Campan. So just in case, we have two, Oscar Campan, both loan officers. But well, welcome, Oscar. Super happy to have you here, okay? Today we are going to cover a very special topic. A lot of people hear about reverse mortgage, and I have no idea, and there's a lot of misconception because people think that reverse mortgage is going to bring a future problem whenever they want to try to use the program, and people don't understand that this is really to help. And other people, that they are usually older people, not like me, but more than 60, I'm there already, and we can use this to take advantage and invest in something else. So can you briefly explain what reverse mortgage is?
Yeah, so reverse mortgage does have this negative connotation, right? Because in the past, a lot of professionals in the housing industry took advantage of it. They took advantage of preying on the elderly, unfortunately. But since then, we've come a long way. There's a lot of laws, regulations, forms, disclosures to protect the elderly, and it's become an amazing program. Since 2005, I believe there's been 1.2 million reverse mortgages done, and 150,000 of those have been done in the past 3 years. As you can see, the progression of time has made them safer. Now, a reverse mortgage is specifically for those that are elderly, that are retired or looking into retirement, typically at the age of 62 at least. There are some reverse mortgages that go down to 55. Ask about those. Those are proprietary programs. Our company has them. But when you're looking at reverse mortgages, it's really to get a mortgage on a home and not have any monthly mortgage payments. Now, how do they do this? Well, you're basically putting a large lump sum of money, right? Whether it be from the sale of a home or whether it be you just have down payment saved up. And then the balance of your loan continues to go up, but it will never go over the value of the home. Now, that's something key and crucial there, is that the amount that you owe on the home will never be more than what
it's a cap.
Yeah, there's a cap.
There's no way to lose more money.
And so that's basically the main thing of a reverse mortgage. No monthly mortgage payments, and it is geared specifically a special program towards the elderly that are looking to retire, maybe keep more money in their pocket, maybe keep their investments liquid. It just helps in so many different ways. Something
very important what we need to explain. Usually the homeowner has to have an equity of a minimum of?
Typically, you're looking minimum about 60%.
Okay.
Right, that's kind of where they start, but we classify the loan amount based on age, based on what their residual income is, and sometimes their credit history. Something that's beautiful about this is you don't need a credit score. And we don't review income the same way as when you're purchasing a standard loan. We look at something called residual income. And the key there is, can you pay your taxes and insurance and stay current on them? That's all. Because you don't have a mortgage payment, the taxes and insurance need to be paid.
And that's very, very important because it's crucial that people keep their insurance, no risk of expiration, anything, because you lose all the benefits.
Then there's a risk for the mortgage to essentially say, hey, we can't do this anymore because you didn't keep up your end of the deal. We cannot keep up our end and keep you at no mortgage payments. There is some bad things that people have heard, which is, well, reverse mortgage means the bank owns my property. And that is false. You keep the deed, you're the official owner. What they're responsible for is that the home never essentially reaches a point where the value is less than what it's owed.
And something is very important, that the owner is entitled, so there's no risk that somebody else is going to take possession of the ownership. So those things, that's why I wanted to bring you to clarify. Because misconception, I heard something, somebody told me something else. But no, nowadays it's a really great program, protected like an FHA program, because it's the government involved. And that's why there's no risk, okay?
It's called a non-recourse loan, which means the borrower, the homeowner, they don't suffer any other ramifications if, for whatever reason, the value doesn't make sense and things like that. The mortgage company and the Federal Housing Administration, FHA, who insures it, they're the ones that are responsible for that. You're still the homeowner, though, but you don't suffer any of the risk.
Okay, well, something very important. Oscar, Guild Mortgage, you can call me. We work together. We already closed some deals. We are always here 7 days a week. So feel free to call me at 323-717-5167. And also contact me if you want more information by email or text. Thank you. Bye.